Welcome, it's the Market Sniper. Yes, and today we're going to talk about the Japanese. Yes, indeed. Of course, don't forget we had an amazing discussion with how the central banks control the global economy with Professor Richard Werner, the author behind Princes of the Yen. That's right, go and watch that. That was released last week on a Sunday. But we're going to be talking about the debt markets with specific reference to the Bank of Japan and the Japanese. I'm going to highlight again to you all, as we said, that the events of March 2020 was the seminal turning point for debt markets globally. That is right, and that it would only go up for rates and down in valuation has been our overall opinion, not only for the USD Treasury bills, but for debt globally. And we followed the crisis that went with the UK pension crisis that saw a Prime Minister last about 1 month, and her financial her Chancellor of the Exchequer. You've always got to have a special phrase if you're in Britain. The Chancellor of the Exchequer. Yes, he was disposed with. It was a most racist event, I thought. But nonetheless, we move merrily on to the notion that the debt markets have turned, and this is also now coming into focus in Bank of Japan and the Japanese economy. So what has essentially happened is the yen, yes, so small wind back. We looked at Stanley Druckenmiller, him of the climate change and the eco thing, looked to him for wisdom about what the key trades. And he said, coming into the beginning of this year, it's never been so hard a year. He had no idea of what to call. It's never been a more difficult year, yada, yada. And he had very little actual trades to call. And I look at the climate change thingy and all of that. And sometimes, you don't want to ever meet your heroes because you find the imperfections. And I was sitting, but the debt market short surely has to be the key trade. We've been on that call since 2020 in August, when we called it first on the American markets and then the ripple through, and it started to confirm the head and shoulder. We've mentioned TLT short for those. It's the one thing that I am pretty assured of is on the way. And that's why we've continued to say this massive bubble of debt has to be devalued, and there's ever more of it coming at an ever faster rate. And guess what? Nation states no longer want to buy the American debt. That becomes a problem for America. They then have to start shoring their own debt, and this brings us to Japan. So it's very interesting, the post-war German-Japan environment, in fact. And if you watch one video, go and check out the Prof. Werner. He reminded us all that actually the post-war Japan and Germany was very industrially strong, and the Japanese were told, you have a savings problem, your savings too much. We need to help you fix your economy because your currency is appreciating and you're selling too much stuff, and we're building too big a trade deficit for you. Of course, it was controlled by the larger central banking cartel, which is controlled by the the City of London, and that, of course, which is controlled by all the mega families of the ages, that many of which you will know the names, therefore we won't get into that. But anyway, those central banks decided through the Fed, which is the dominant one that they're working through for now until they pivot. Don't forget, Kissinger went east to China. The gold is going east. Everything's going east, global south, whatever. Okay, so what's actually happened with this Druckenmiller chat is that he really had very little to give us. And I was like, short the yen, short the debt. These guys were simply doing, on a fundamentally logical level, maintaining the 0.25% rate, that was way back then, and doing yield curve control in an environment where other nation states were allowing the debt to devalue and the rates to go up. Inevitably, as a synchronized global cartel, all with the same sins. In other words, we're all lepers in a leper colony thanks to the Zio globalization agenda. You were essentially getting a situation that couldn't hold. Water finds the level. You can't have one at that level and that at that level. The water levels out. And now we're starting to see news flashes around the Bank of Japan starting to let debt go. But before we do that, let's have a look at those legacy videos that we've shared. So if you look at the Market Sniper, I almost said the Smarmy Sniper. He probably is that as well. The Market Sniper Japan, for example. And analyzing Japan's debt markets. Japan shocked the harikiri of the yen, I think is the correct phrase, the rising sun for the export majors. We also highlighted that inside of the collapse of the yen, as long as they were supporting the debt, which they are still doing, but they are letting it go, as I will be updating you with shortly, the Nikkei will make new highs, and the longs, particularly on the export-driven major brands, would do you very, very well. So we are going to do a little check-in on that and how you done. And had you been in our community, you may have had a handful of these. In fact, we have unique setups that I'll not be touching, but I'll show you one or two names that you will know, like Toyota and Honda, and show you how they've done. Since Stanley had no trades, and we thought we would offer something in lieu of Stanley's lack of trades and the hardest possible year, only we have this weird environment where one nation, major nation may I say, that many of us don't think about, because many of us A, haven't traveled to Japan, B, it's a long, long way away, and C, it's a curiosity to us. They have an amazing culture that is very different to ours, and we just kind of think of Europe and America, and we forget that that was in fact the second biggest economy globally at one point, and is still one of the largest. So had you gone long? Let's go to the news. In fact, let's go to those news drops that are starting to happen. I, of course, refuse to pay and cancel my ad blocker when looking at a Bloomberg article or any of these other schmucks. But you will see JP Morgan, Fed Bank, that's right, sees BoJ negative rates, yield control gone by mid-24. How would they see that? How would a bank that actually owns the Federal Reserve, and that bank that is itself owned by BlackRock, Vanguard, that is itself owned by the City of London, which is itself owned by those very same families. I wonder how that bank got to know what a nation, independent nation state on the other side of the world, if we're meant to believe that, bank head will actually do, that will lead to yield curve control gone by mid-24. So the key trade that Stanley didn't tell you, that he probably knew because he's smart enough that we did, was that the pressure on the debt situation in Japan would have to break. And in the meantime, as long as it didn't, the yen will weaken, and B, that means their costs locally go down on salaries and various other things that are yen denominated, and therefore they start to be able to have cost benefits for their major exporter, the ones that sell more offshore than onshore, such as Toyota and Honda and various other non-vehicular organizations such as Sony and potentially Panasonic, if that's Japanese. I've got to make sure I get that right. Anyway, the Bank of Japan's yield curve control and negative interest rate policy will likely be removed by mid-24. That's as far as we can get out of them, because they want you to pay. But if we have a look at the Washington Post, I think that's owned by Bezos. But nonetheless, we can have a look. Why tweaks to Japanese yield curve controls will rock markets? That is their lucky winner of who gets to be the manager of the biggest Ponzi of debt. Well, not quite the biggest, but one of the biggest. What is a yield curve? Quite a bit of explanation. I think most of you will know that yield curve control was where they actually kept a cap on the interest rates. And as a result, were artificially managing an exceedingly low interest rate environment at the same time as oil prices were going up. Remember, Germany and Japan got forced into having to pay dollars or own and hold dollars to purchase energy. Both those nations were not particularly rich in energies, as they were saving too much and exporting too much to America to ensure the hegemony of the petrodollar, which saw Kissinger visit the Saudis and say, nice place you got here, time for a bit of protection racket money. And also you're going to buy our debt with your dollar-priced petrol. That saw the likes of Japan and Germany need to own dollars. So anyway, after that little side, what does the Bank of Japan do? It seems they are starting to let the actual curve go. And what happened today? Well, it's kind of interesting, because I was looking at the charts, and I don't actually look at the Japanese debt that often, because in truth, not always that much happens. We did a draw in the beginning of the year, or so that's a full 2 years almost ago, 19-20 months ago, for an upside, first in a new trend, with a little bit of a double bottom action going in there as well on the debt markets in Japan. So there's that W bottom. You can see it there if you dare. And then that squeezy on the right shoulder. And we said, because it's the first in the new trend, likely overperformance. That means this is a major reversal that's going to turn and run. And in actual fact, we made a call that you would run through the 5%, 0.5%, let me correct myself, on that yield curve when it was around here, made its first interim, messed about a bit, then pumped straight through, made our target, and then pulled back for a wee bit, and is now beginning that very overperformance that we called would occur, and I see is literally substantial, and I mean substantial. We're on a monthly chart. It will go off the screen here and beyond in our overall opinion, because that has to devalue. It has to devalue. The debt has to devalue. I think they were in and around 300%. It has to devalue. Many of the Japanese little ladies were putting all their savings into government bonds. They went out to search for yield outside of Japan, and that could actually see a lot of Japanese savings getting repatriated if the yields start to return to something more sensible. But that will take a while. But today, as we look, the 75% level has fallen on the Japanese 10-year, one of the biggest contracts. Japanese government bonds 10-year yield is now crossed the 0.75. And that is, my friends, quite phenomenal. That is quite phenomenal. I think I saw it by fluke, because, as I say, I haven't been passing by the Japanese debt market since I drew that setup some time ago. And then, after researching this, I see the tweets now heading out, and it seems this came out only 2 hours ago, and it is highlighting exactly that. So A, we are accurate that the seminal debt market is over. The biggest, most lowest yielding, overvalued debt market that was still holding on yield curve control is throwing in the towel and letting the rates go up. That means it's going down, and it is not coming back down. Don't listen to words like temporary. Don't listen to this. This is too much debt out there, my friends, and it's got to go down in value. And how does it do that? You've got to have a pump in yield rates. And when it surges and it absolutely pumps, everyone who is on borrowed money will no longer be able to pay. And it's part of the plan about how you kill your entire lower end, your middle class and your upper middle class that have any form of borrowing. The banks will own it all. You will be flushed out. How many times on this channel over the last 5 years have I warned that you need to eliminate debt from your particular portfolio and your exposures? Pay off your mortgages, pay everything off. The interest rate spiked. I've used the small microcosm that was the Soros pound event where people's housing, there were brokers running around, who wants to buy my house, and rates spiked to 15%. That was only for a short time period. That was a perfect test of the pressure point that it'll bring about on everybody. The tertiary extractors will pump the rates on a major debt crisis, and they will hollow out everybody who has any form of borrowing. We have said that, and we've become more emphatic about it over the last 2-3 years since calling the turn in the debt markets. And now everybody, that was a radical call in 2020. Now everybody starts to think that the debt market is called. We give you the news 3 years before anybody else starts to even consider accepting it. That draw was done in 21 on Japanese debt, and it's now hitting its overperformance period. You should be short debt. You should be short debt. You should have zero exposure as a lender to interest rates. That is where we're at, my friends. Bonds are a sell. Bonds are a sell. I repeat again, TLT, you will never have your own money, and bonds are a sell. Those are about as assured things as you can say, and privacy is gone. This is a surveillance finance world. Those are 3 hard truths, hunt-based truths that I'm here to tell you and remind you of. So, with that all said and done, we combine that fact to say the yen will go down, and it'll be a tough time for the yen. So let's bring up our friend, the Japanese yen, and have a look how it's doing. So the USD Japanese yen is a currency that is now taken all the strain of the fact of the yield curve. And what did we say on our USD Japanese yen trade? We said over here in the orange, nice busy chart as always for you to enjoy. We said over here in the orange, let's go fat cokey, stay with the orange, that you have a left shoulder with an armpit kiss at the 137.50 line. That's there in the blue there for you. You have a Mondo W head, and then you have another visit. That's armpit number 2 of your head and shoulder. So there's your W head and your final right shoulder. We said at the time that that triggering event that gave you a beautiful second chance a little later, by the way, will see you get up to the 148.532. Don't forget, that was quite shortly after one of the harshest sell-offs from 150 all the way down to 127. And here was someone saying you are in a reversal now once you hit the 137.5, and we were calling this pattern before it triggered, that you will see you back at the 148.5, probably running a 149. And here you are today. That is what your yen has done since its second chance. Would have been a bumpy ride after that sell-off. There was a wee spell when they let the rates go up to 0.5. So they let the rates go up to 0.5. What happened? Major smash down. Where did it happen? A legacy funnel from that random concept called Hunt Volatility Funnel Method. How fluky, how coincidental, they say. Not to me, it isn't, friends. That's where you formed a very low vol little moment. Bang, it fits like a glove to me right the way down. Where did you bounce? Return move to the 137.50, and you are literally within a hair's whisker of meeting the 148.532, which is a substantial move from 127. Don't forget, that was still 2023 January, friends. You could have got in at 127, and let me just repeat, in July you could have got in at 137. Those two lows, totally predictable after the allowance of the 0.5 run, which we also saw on our debt first setup in a new trend, W bottom with HVF on the debt market that I showed you just prior to that. So you would have seen debt market devaluation on the basis of this setup, first HVF in a new trend, and now you are seeing 75%. And now you get the news, friends, which usually means it's about to have a little bit of a pullback. There's the rates, kind of gone very strongly up there, in the same way it went very strongly up there. By the time you get the news, you're about to be made a bag holder for a potential possible pullback. Dush, it could come, but longer run, we go up. Why? Because debt, there's too much of it about. There is no value to something that is utterly proliferated as an asset or investment class. It cannot and it will not be paid. There is an immense amount of inflation around. The money is being devalued at negative interest rates in true real terms, due to the fact that inflation is run away. That's fact. You are owning an asset that is automatically, in a compounded fashion, devaluing against you and will not serve you, and will unlikely, potentially, could go into a capitulation spill. Debt is a short, debt is a short, debt is a short. All debt, including the Japanese variety, which will have an even further way to fall as interest rates climb. So, with that said, we also made the comment that the exporter big brand companies across all the high quality manufacturing exporter big brand Japanese companies could do exceedingly well. So let's have a look and start with Honda. So Honda, I'm going to show you both the Japanese version, and I wanted to mention you can invest in Honda without assuming the yen risk. So were you to have bought the Honda US listing that would be dollar based, you protect yourself from that very same devaluation. So as Honda's costs go down because of the yen devaluation relative to the rest of the world, and they get a competitive advantage, they start to gain, add more luxury bits for less money, and they start to gain market share. I wouldn't say automotive vehicles in this 15-minute city world is going to be necessarily my highest growth sector. Generally, but what you will see is a massive degree of market share capture by the lower cost, lower yen based economy. So inside of that, let's have a look at both the Japanese version of the particular company in question. There we go, 7257. So since we've been telling you, you could buy the Honda Motor Company, this is how it's done. This, by the way, is one of our HVFs that you could have been in. This is a macro HVF that we have called on Honda, and we make the ridiculous assertion, listen to me now, the ridiculous assertion that Honda will trade at 10,125 yen. That's right. And you could have got in anywhere along here. That was the final little squeeze at 3,500. So you're talking about a very well established, very keen brand that does motorcycles, cars, you name it, they do it in the automotive industry space. That'll go from 3,500 to through 10,000 in yen. Don't forget, there's going to be a yen devaluation aspect in all of that. And it is now, since that call, already at 5,267. So Stan didn't want to give it to you. He either didn't know it, I doubt it, or he just didn't want to share it. He wanted to talk about climate change policies, but you got it from us. Honda is going up. Honda is going up, and that represents from 3.5 to 5,300. It represents almost 2,000 yen that you've gone up. 1,800 yen on 3.5. That is a 50% move, friends. That's a 50% move this year so far in 9 months on a very stable major equity, not including dividends. How do you feel about that? Not bad. How do you feel it going to 10,000? Pretty good. But what about that yen risk? So let's go to Honda as listed on the American markets in a dollar-based degree. And let's put it in there. So there you go. There she is. How's Honda done since the beginning of the year in dollars? Well, friends, you could have got in and around $21. You're sitting on $36. This is a massive company. 21 to 36 is $15. You're talking around 70%. You're talking around 70% on the Honda Motor Company. Okay, well, what about? You know the names as well as I do. A very quality brand known for its reliability. We have a look at Toyota on the same Japanese market. By the way, these are key investment themes that we identified, that they wouldn't give you, that we shared for free on our YouTube channel, only after a substantial period for our premium customers to get their positions on and build their own size and views in terms of this. Here's how Toyota has done in Japan. That little HVF got you in at 1476 on a macro view. So that was at 2021. 1476, 1480 level. You are now at 2785 yen. 14 to 28, that is 100%. That is, of course, starting from the early parts of 21 now. So that's actually a 2-year period. And that includes the shocking events of March. No, it doesn't. No, it doesn't. What nonsense am I talking? That was the March 2020. I apologize. I almost misspoke there. That pullback was actually in 2021, not in 2020. That was your March 2020 events. I apologize. So there was a pullback. I can't recall quite why, actually. I'm a little bit stubborn. But we broke our capping descending line, and now you are heading for the moon. And there is a lot more. Let's have a look at the Toyota listing on the American market. The American market, Toyota. So, US listing over there. Have a look. This is how it's gone since the beginning of this year. So again, it traded a low of this year around 132. It's at 188. So had you just got in randomly in the 135, 136 mix, you would be at 188 in dollar terms, not including dividends. So this has turned into, again, another good move. So I want to just show you how this has actually performed. Generally, of course, as a company, Toyota has been a magnificent share to own, going from 18 in dollar terms. This is the New York listing to 188. So that is a 10x since 92. So pretty decent. 8 years plus 23. Yeah, it's about 25 years to get a 10x. Pretty good. Don't think cryptos in terms of all of this, and more to come. So there's a couple of examples. Now, in our community, we are doing deep dive research. We will continue to unfurl those we will get export advantages. in the Japanese equity area in an environment where their input costs in yen is decreasing due to the devaluation of the yen, and that their market share as a result is expanding as parcel of their exports, competitive advantage as they steal market away in very high quality export driven yen hedge stocks that earn their income in other currencies apart from the devaluing yen, which means when converted back they get even more profit in their domestic currency, and you can own and hold American versions thereof and avoid the exposure there too. We also gave you on the Nikkei some time ago, and we highlighted that not only would the Nikkei get a new high, but the Nikkei would smash it So here we are with the Nikkei, and as I've mentioned, we've got a very, very big call that we've given. That was this particular left shoulder, your complex head. We wrote the book on complex head and shoulders. It's in our course content. It's in, you watch us implement it inside the community with many, many structures, and it helps us see things that others simply don't see well before they see them. So this 20,000 neckline over here was the beginning of the break. You got a return move visit. You never ran your right shoulder stop. And since then, it's been strong, strong, strong. You smashed it up to the 30,000 key levels of significance. That turned into a continuation pattern that came down. There was also an upside HVF in there that's still pointing to the 34,585 as a key target to be made before you get some pullback that could see you come some of the way back. But where is the real big target taking you? And what was that number that I was searching for that I didn't recall? 57,000, which, by the way, is well beyond the 38,957, roughly the 39,000 that was originally. So the Nikkei is going to be a massive overperformer on the basis of a currency devaluation, which is also going to have a very big debt level also devalued steadily with ever rising rates. However, they aren't going to be able to devalue it at a sufficiently fast rate that is not going to see the ongoing devaluation of the yen, and as a result the 57,000 target on the Nikkei is going to surpass previous highs. There were countless Merrill Somerset Webb all throughout the 2000s, every year, 2016, 17. This in Money Week, for those in the UK will know it. This is the year of Japan. This is the year of Japan. Man, you're talking since 1990 to literally 2020. You're talking about 30 years. They pulled back in the crisis. That would have been an absolute nightmare period. You're talking about 30 years of net down, of 30 years of effectively net down from there to there. However, this has now turned, and eventually you will get the delights that the yen can offer you in terms of its manufacturing prowess with this move, and a 57,000 is available. So for more details on how you can surpass that, and the search and the relevance and the individual equities that could be purchased that are in upside HVFs with massive upside targets, apart from Honda that we've shown you, and we also gave you a little bit of an insight on Toyota. You need to be part of the community. Click the first link in the description below and join us if you too would like to see your investments do a 10x in 5 years instead of going sideways for 30 years and down, like the period from 1990 through to 2020 on the Nikkei. The good days for the Nikkei will return in our view. And for every short and every devaluation, there's an opportunity somewhere else for a long. You definitely want to be short debt. You can be short Japanese debt. You can be short any of it. And if you want setups, then you need to be in the community. Thank you for watching. Thank you for checking out why we are bringing you news on Japan and why it's an interesting place to potentially contemplate investments on individual equities, and how those are likely to serve you, and what the targets, the stops, and the entries can be on the basis of highly expansive rewards with super tight risk. If that makes sense to you, you know it's time for you to come and check us all out. Thanks for watching and catch you later. Bye for now.